Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting, and good morning to all Trader Lab participants. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades, and these are available to all of you in the Bookmap Discord server. And the Trader Labs, a community of like-minded traders who come together to leverage their collective experience. It's about the business of trading. It's about developing trade plans. It's about only interacting with the other participants when you have a statistical edge. And it's also about getting a grip, if you will, on your psychology and understanding the potentially the most significant impediment to sustainability, which is you. I know. We all look for software, indicators, gurus, etc., setups, right? That's not the problem. The problem is you, your beliefs, and trying to fit this business into your comfort, which is squeezing the risk out, creating certainty, and, quote, confirmation. If those words are in your language, that is one of the reasons why no matter what you come up with, you may not be able to execute it. So then what's the point? That's why the Trader Lab was created. That's why I created it. And that's why I'm here to share my experience with you and the experience of other traders. And we've all come together to leverage that experience to create something better for all of us. And that might be something that can be created for you. So we have a lot to talk about today, of course, and it's FOMC day. So the market often offers a substantial amount of opportunity pre-FOMC. And then, of course, when the report comes out, we are anticipating a interest rate cut, maybe quarter point. It's probably baked in the cake. The real thing in FOMC is the press conference, and that's about a half hour long, and that is after the report is announced. So the report or the cut is going to be announced, if it happens, at 1 p. Central Standard Time, and then the press conference is at 1:30, and that can create a lot of outsized volatility and risk. So subject to your plan and everything else, you may want to be a tourist, tune in, enjoy. Again, if you do trade reports, then you have a report plan. If you don't, that's gambling. Just an opinion. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of losses and not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. If we get to it, we'll talk. Also, this stream is exclusively live in the Bookmap Discord Trader Lab community. If you're visiting on YouTube and you want to access these streams and the posts by the community, trades taken, structured trades vetted, questions, locations of potential behavior, order flow, and the rest of it, use the link in the bottom of YouTube. You can be there real time and leverage the collective intelligence and experience of this very special community. Now, a little announcement or two, and we'll move on. And grab a pen and a piece of paper. I'm going to show you actual trades that traders in Trader Lab are vetting, behaviors, anticipation, and, of course, randomness. First things first. Do you have a trading companion? So take a photo of your goldfish in front of your monitor or your favorite trading companion. I do know cats can be more risky than other animals because they tend to like to walk on the keyboard. And I know specifically of instances where 20 lots got thrown in the market when that wasn't exactly a good plan. So if you have a trading companion, just drop it on X, LinkedIn, or Instagram with the hashtag BookmapPeps. You can win a free month of Global Plus. And as my mother used to say, free is good. Now let's look at the higher time frame. This is our, quote, bull market. And basically, I just want to isolate an area of it to help you understand market mechanics and how you might use certain behaviors to anticipate. Now, I have a little saying, and there are a couple little, cute little terms. You have to anticipate to participate. And one of the things that I've observed, and you will too if you haven't thought about it, is the market is rotational. Now, this might seem obvious, but it's happening in all time frames. If the market has been going up, bull market, trend day here, by the way, and we're going higher, higher, what's not happening? The longs are not being abused, and the market goes up to go down, and then it goes down to go up. It goes up to go down. What did we do yesterday? We took out the weak longs. This is the first time the longs in this leg got abused. So initially, coming in today, the possibility was if we got out these guys out, then we could go higher. And then we closed inside. So this is called balance. Now, this is all very important. This is auction market theory. Now, simply put, the auction is shopping. So if you know how to shop, you already know how to trade. The thing you don't know is how to trade in a real-time auction versus your store where the prices don't change much. It's time frame based. Isn't that an interesting connection? They don't change the prices in the store often. That's time. In our business, it's all the time. Opposite time-wise, but behaviorally the same. What's too high? What's too low? What's just right? And that's what retail is, or high volume in your store. If the price gets too high, I'm not paying that. It shuts off the buyers, right? You ever go into the store and say, they're nuts, I'm not going to pay that. And if it goes on sale, you're right there throwing four in the cart, you see? And that's what creates rotation. So now let's go back to the higher time frame. Now, the high time frame, bull market, gone up, who knows? Someday it will stop. When you let me know, send me a postcard. We'll all know after the fact. I don't pick highs, I don't pick lows. I attempt to get in alignment. And that, I think, is a smart way to do this, because hindsight's 20/20, but foresight, random. What do you think? So this green line is called the microcomposite high volume node. Let me translate these terms. Don't worry about it. This is where the highest volume is in this rotation. This is a consolidation. And what we're doing is the volume in here is being measured, and most of it's right there. Now, remember, when you buy your can of tuna in the store, a retail price is a fair price. Everybody, buyers and sellers, do business there. It creates volume. So as long as we're in here, we're going to slosh around and whatever. Now, out here, and that's why there's these arrows here, and this is done around, 6 in the morning. So all this is posted in TraderLab before the fact. This is an outside edge of this. This is where it was on sale. And so this is our outside. So we can come out here and come back here. But what happens if now this is too high? And I couldn't tell you why it's too high. As a trader, the why is not as important as far as what we're doing is we're trading participant behavior, getting in alignment. We'll find out later. But in the meantime, this is what we're trading. So this is our outside edge. It's around 60-ish, and that's been kind of our support so far today. If we get below here, what is that set up? 50, 49, and maybe 44, and who knows, right? By the way, down here, just as a sidebar, which is why this is outlined, this is when we had our trend day up. If we get under here, then I am going to go and put my helmet on, because then we can come all the way down here. Not a recommendation, I'm just saying. But right now, the immediate objective is to see if, and that's always the big question, can we get here? So, everybody with me so far? And how we doing in TraderLab? Okay, let's look at this in a structure that might be less familiar to you, and that's market profile. This combines the market profile, which is letters or TPOs, half-hour brackets. That's what I used when I learned it before we had volume in the Stone Age. So I learned the market profile in mid-'80s. Boy, did I I thought I landed on Mars. First time I saw this, I said, I am on Mars. I can't do this. And then this is the volume profile. The gray is showing the volume at price. So it adds more. So this is yesterday. This is the RTH all-time high. Let's look at what it says. This is a language. We opened. This is the new all-time high. And notice the acceleration down. Now, yesterday was shorts. Can't tell you other than it was. And if you watch yesterday's stream, you'll see it. And if you guys are in YouTube, remember this is being streamed real time in the Trader Lab, and it's going to be posted after the fact. And this is urgency. The market opens, get some buyers in, and then those early buyers become what? Sellers. And off we go. So this set up shorts, and it was just primarily shorts. I think I had one long yesterday that I narrated. Can't remember. But mostly it was just outside in rotational trading. This is called mean reversion. I joke about it because it's mean because where's the outside edge? How would you like to know the outside edge was right there? Right? That little node sticking out. Let's talk the language of the market. When you have a consolidation, it's an auction. Too high, too low, right there at that 86 is a high volume node. Now, what's high volume? Retail. Imagine this is a convenience store down the street from you. Pint of ice cream Saturday night, you go for the movie, and it's too high. Well, you're not going to shop there. Now you go to the other little store across the street in the neighborhood, too high, too low, retail, and you go, boy, that's still too high. And you get in the car, and you say, I'm not paying any of that, and you go to the next store, and this becomes the supermarket. Now, and what's the last auction microstructure in here? Too high, too low. So I'm leaving, I'm rejecting, high volume here. And this is the previous day's value area. 70% of the volume from this day is here. Once I get in here, there's about an 80%-ish probability. Past performance not indicative of future results. Come there. What else do I know? There's stops under here. Well, if I took out the high on the gap higher, is it reasonable if I come back inside that the longs who are in here are now on the hit parade? What do you think? Maybe. So now what? If I know the possibility, that's all you got, is to take these buyers out who are in here. Don't forget, we got the shorts out. Market goes up, go down. Then I'm aiming for that. That was a primary target for yesterday, and who knows, could go to zero, right? So now the trade yesterday was outside in. It's called mean reversion. Remember that. This is the primary behavior of the market. Now, what about targets for today? I know you want to know. Well, there's a couple down below, and you always have to vet these for yourself. And remember, it's all random anyway. This is the fair price from here, this day, and it was too low. Oh, and here, 49, too low. So too low, too low. Notice this here. This was an accepted area. Gap high, go up, see you later, too low. But what happens if we found too high? Let's go back and check too low. You see the logic? Not complicated at all. Just random, right? Okay, now let's go. I'm going to give you some statistics. You have to vet these for yourself. Past performance, as they say, is not indicative of future results. Now, I'm going to give you something called context. In other words, the condition of the market. Now, all this is posted in Trader Lab pre-open. I'm not going to show it to you, but if you want to come to Trader Lab and you're watching this on YouTube, there's a link down there. You won't be solicited or otherwise abused. The market takes care of that for all of us. And that's kind of a joke. So, but the Trader Lab community is available to all of you. There's no cost. All you got to do is register, confirm your Discord username. You'll get a little code so you can confirm it, and then you'll have access to everything in the Bookmap server. And there's streamers in there besides me, other elements like stocks, options, crypto, order flow, of course, with a high tier tool like Bookmap, and a lot more. Algorithmic behavior, market maker behavior, and the kitchen sink. So we're opening in range, yesterday's range, in value, value area high. So what does that mean? Great question. Yesterday's low, okay? ETH high, high probability take out ETH high or low. Who knows? And yesterday's high. So we're opening in range in value. Now let's go to our little grid sheet. Now all this material is available in the document section as well as a library of webinars. We're opening in range in value. What does it mean? Don't you want to know as a trader what it means? The market is in balance. What does it say? Likely a neutral day. That means we could take out the high and low of the first hour. Possible. That means there's no change. Or a low conviction day. Now, what happens though if we come outside of value, which is here? Then, so there's value area high, value area low. And, you know, it's, you could see, and that's 70% of yesterday's volume with the retail price here. Okay? So if we fall out, that then changes it to potentially directional. Okay? And if it becomes directional, the market is now breaking out. And if it breaks out and we come out of the prior day's range, we are rejecting the previous interpretation of value. That suggests south by southwest shorts. So now, and statistics. Sorry, guys, trying to cover too much. Part of my problem. Multitasking, not my thing. So settlement is here. So we're opening higher inside of yesterday's range. So here's some probabilities. You have to vet these. Taking out the first hour's high or low, it's called the IB or initial balance, is about a 98% probability. Taking out the ETH high or low, 97% probability. Taking out the value area high or low, 89% probability. So, you know, ETH high has a higher probability than the ETH low, 76% probability. Isn't that nice? The overnight mid, 75% probability. Previous point of control, 68% probability. Now, here's one that I really like. The overnight volume point of control, 81%-ish probability. Now, where are our extended targets? 50-ish, and then here. This is the next target. Now, here's a little, what I like to think of is a fly in the ointment. Here's what it is. And it's not anything more than maybe. Taking out the ETH high and low is a 33% probability. So this has 33%. However, we're outside of value. The next element that's important, and I mentioned this at the top of the stream, if you missed it, just scroll back, is this. This is an outside edge of an intermediate time frame. If I get below here, this is what's on the hit parade. Not a recommendation, clueless. Is everybody with me? Give a thumb up. Give a, what are you talking about? How we doing? Thanks. By the way, if you're in Trader Lab, I have asked, and this is really important that you do this. You haven't gotten around to it. And I know there's a lot of you who intend to do it, but you haven't gotten to it. I've asked a very important question. If you could go back in a time machine and you could counsel that newbie trader, what would be the most important things you would share with that trader based on what your fantasies or imagination was of this business versus what you've learned so far? How would you post it in the Trader Lab? Very important, much more important than you can imagine. And thanks to all of you who've already done it. There's a large group in the Trader Lab, and many of you have been in the Trader Lab for quite a while, sharing your expertise and your development. But we need mutual support. So I need you to support me as much as I support you. I hope you'll return the favor. So, RTH open. Let's watch now. So what do we know? What do we know? Great question. What do we know? Now, this is an aggressive trade. I don't call trades, because I always think, what do you need to take my trades? I take stops. What's the point, right? You have to learn your own trades. But I did post that I was on the short side. And when I came in, I anticipate, based on the open, something called an open auction. Now, when the market opens pretty much at a fair price, which is here, in the ETH, the last auction, the overnight volume point and control is your can of tuna in the ETH. Yesterday in the RTH, the can of tuna was right here. That says it didn't change. We're opening near settlement, so this is a fair area. What the market tends to do, and I post this in Trader Lab, these aren't recommendations because I always say I'm clueless. And I say clueless because then that keeps my mind open so I can narrate the market and look for clues. So clueless, looking for clues. How do you like that? That's what going to college does for you. Okay, so this yellow line is called developing volume point of control. Now remember, I'm showing you these high volume levels, both above and beyond and down below, higher time frame, same concept of shopping. When the market opens, now we're outside the supermarket, and instead of having the once a week sale and the rest of that and the retail prices, now we're in real time and the auction is active, real time pricing. Too low. Buyers are here. Now I'm using order flow. The book is thick. I see the push. Let's just watch. I have a sell sweep here. I'm now incorporating multiple elements in real time. These are not actionable. What I anticipate, remember the word anticipate. I'm never going to say predict. I'm always going to say anticipate. My job as a trader is to recognize as quickly as possible the elements I have defined, the conditions. And it's a process I call narration. In other words, if this, then that. If not, then what? If I have a sweep, if I'm opening in range, in value, if I move higher, what do I have? I have a high probability of going here. I'm in value. I can go up or down. What else do I know? The market took out the stops yesterday, the weak side. So I'm anticipating higher. So, but because I'm opening in range, in value, and the rest of it, I'm not going to rush in because I anticipate two-sided trade based on the condition of the market. I hope there isn't too much information. All this goes into before the first trade is put on. Or otherwise, you're just making it up and you're gambling. And again, if you have an edge, no matter how you do it, then you're not gambling. But if you're just going, push the button, no, not so good, in my opinion. I've been there, done that. Are you still doing it? So this suggests higher. So in this configuration, I'm looking for two-sided trade. And what I often say, and I call them stop picks. A stop pick is where you get your first buyers. Remember, what does the market do in all time frames and fractals? The market goes up, it goes down, it goes down to go up. Two-sided trade. It's called an open auction. This is the opening swing low. So that's the first low. What is going to be under there? I'm going to ask this astute group of traders. Well, what is that? What's under those buyers? Isn't it stops? So if I have my first buyers here, and this is the first target, I did not take a long. And of course, let me tell you what the lunatic under the hood, I call him hide, hindsight 2020 hide. Yeah, you should have bought it. Well, my plan says you should have nada. So I follow my plan. And it could just as well hit this target and keep going. And if that was the case, I know I'm going to get long. But the context suggests no. Now, when I say no, it doesn't say no. It's suggesting. You notice how I'm not saying it says, I'm saying it's suggesting. That is another term for maybe. Maybe it'll do this. Maybe it'll do that. Maybe it won't do any of it. Maybe you'll go, what's going on? And that happens a lot of the times because when the market transitions, I'm clueless. So what do I know? Let's go back to our store. Too low? Too low? Why didn't we go up? Too high. Uh-oh. Now, what is this? This is a version of support and resistance as I view it, because Prices are not created equal. The volume is what tells you. When you go to the store, remember, the volume is the retail price. In a real-time auction, the retail price is changing. So, too low, too low. Why didn't we go up? We went up here. Why did we break down? Right here is support. Right there. For me to go higher, I've got to clear this. See if that doesn't make sense to you as an astute shopper. So this is now my resistance. This now, here, is going to be resistance. So resistance, I should say support. Resistance. Complex. Watch. This is my first short. Where's my resistance? Watch. It is right here. So right here, I get a sweep, and the possibility is counter rotation. What do I know about this, you ask? What is under here? Stops. If I think it might go down, and I don't know, then I'm going for this. See? Now what, you ask? And I'm going to ask the same question. Now what? Where's my resistance now? I think I might have put it in the wrong. In here. This high volume. Okay? So let's watch structure, guys. So, and let's look at the order flow. You see this? What's down here? Dark. Press. So I'm looking at the order flow. This is how I put pieces together. I'm looking at the auction. I'm seeing that maybe I found too high. No clue. I'm inside of value, and so far I didn't get to the ETH high. And this is where my fuel or stops are. I also have overnight volume point of control. And you remember 82%-ish probability, and you have to vet that. So I'm going here. Okay? 82%. Might you do that? I don't know. Could be a good idea. No clue. So that's my first trade. And now I have ETH mid and the rest of it. And wherever it goes, it goes. No idea. This 60 is an important level out here. Okay? So I'm kind of shooting for this and then maybe down to 50 and no idea. You know, that's neither here nor there. But all this is laid out. So now this is my next target and I'm managing my trade. Now, remember how the market works. The market goes up, go down in all time frames. And the market goes down to go up. So what do we know? Let's come back. Common sense. Don't forget liquidity. Market goes up to go down. And what's now in here? Buy stops. What was in here? Sell stops. So what's in here? Buy stops. Let's watch. So when I'm thinking about this, and that's about what I do, I think about it. I have to be thinking about the language of the market. I don't use indicators. I'm very happy to say that. Why? Donated too many dollars to the Floor Traders Pension Fund using indicators over many years. And in spite of all the winning trades, thousands of trades over 46 years. I couldn't tell you. And I got to also add to that, thousands of stops. And I always had winning trades. Winning weeks, even winning months didn't matter. But I was always trying to make it better and fix it. And I didn't understand my problem. I thought I could create more certainty by squeezing risk out using indicators. Now, I'm not saying you can't use an indicator, but what I'm going to suggest to you, do you know how to use an indicator? And when it might actually be an asset versus a liability. You can't answer that because it's not generic. Trading is not a generic process. So plug and play doesn't work. If you are doing the plug and play, which every developing trader does, we've all done it. How's that working for you? And it doesn't matter, you have winning trades. Anyway, this is the target, right? Statistical probability. So far so good. Going, oh, this is wonderful. Going to have a wonderful time. And let's watch. This is where I'm going statistically. Now, I'm outside of value. This is suggesting if I can get under here, south of the border, and here. Let's watch. Now, this right here, I got taken out, trailing stop. I managed my trade. Remember, I'm clueless. I don't know. And we come back across the range. So right here, the teeth are chattering, and I'm going, what's going on? So right here, I did not get long, and I just figured, okay, I missed the long, and I've got nothing to do. What did we do? What was the probability of getting to the ETH high? And for me, it's clueless, naturally, 97% probability to get the ETH high or low, and ETH high on its own is almost a 77% probability. So this was in the cards. So if I was just sitting here asleep at the switch, what would have happened to me? Stopped out. I don't do that. And I take stops. So I'm just saying is, I have a trade management plan. So this comes up here. And now I've come across the range. So I'm saying, well, I still got two-sided trade. So now I'm going, oh, what's going on? I guess that's that. We didn't get here. This looks safe. And now we're going to go the other way. I'm above my variable high volume node. Let's look. Now let's look at, here's another reason I covered, by the way. I forgot to mention this to you. I'm coming down, having a wonderful time, and I see this liquidity pull. It's gone. So this, I look at these like lids on a pot. Simple. You know, trading doesn't have to be complicated. We think it's complicated. It's really not. It's just random. Change the language in your mind from it's so complicated to it's so random. If it's random, you can address it differently than trying to solve for complexity, which our nature is to add more indicators to create certainty because of complexity. Redefine what you believe the business is. It's a suggestion. You don't have to. I had to do that because I thought I could squeeze risk out, and that means squeeze risk, get more certain, right? More certainty. How can I get certainty in randomness? Well, if I can't solve for certainty in randomness, then I have to solve for randomness and uncertainty. And this is not a semantic discussion. This is much deeper than that. This pulls, and now the lid's off the pot. Now, when I see this pull, my teeth start chattering because now I'm saying, well, where's my pressure? And look at this down here. I got my buyers. So now I'm using order flow, and now when I see all this, I'm going, trouble, maybe. And I have nothing now. I'm going, what do I have? I have delta. So now I'm watching the delta, and the delta are the aggressors. The aggressors are new shorts and sell stops, market orders. The passive side, which is the limit order book, you know, what's sitting out here, these are limit orders. They're hanging out. Hey, you give me my price, fine, you can have it. Otherwise, I'm not interested. Well, what's this? Icebergs. These are limit orders. They are absorbing. So what I know is I got my sellers, sell stops, thank you, and I got my buyers. Lovely. Always got two sides. But what I don't know is, are we going to just keep going? Because this is another target. And what was that probability you asked? I know. Previous high or low, 82% probability. Well, seems to me at the moment, yesterday's high is not on the hit parade. Wouldn't you be targeting this if you had locations? So this is where I'm trying to go. And 60, that's a big deal. These are targets for me. Outside edge, remember the top of the stream. If you don't, scroll on back. This, who knows? Now let's look at the next short. So right here, I am, as they say, baffled, clueless, and going, I don't know. Now the word I don't know replies to I don't have a trade here. And I'm thinking, well, that was it. Going up. Got to think long. So I'm looking. But remember, I'm now back in value and yesterday's range. I'm still in yesterday's range. I haven't come out. So for all I know, we can just slosh. It's pre-FOMC. look at this. So right here, I'm looking at this and look at these icebergs. Let's look a little further. Notice what comes back in, the liquidity. So I'm now starting to look at this and going, my liquidity is here. My liquidity is coming back in. And I've got this iceberg, so I'm seeing the sellers. And I got my statistic, right? So all in here, it's okay. Now, I get this. I get a break. And now I'm under this. I'm under this. This is now comes in. You notice how it breaks first. Then the liquidity comes in. So I'm watching this. I'm watching this on the way up. And remember, this is related to this. It's resistance, you see? Then it pulls. That opens the hatch. Think of a lid on a pot. Then what? Where's my liquidity? I get a little here. But my thought, I'm telling you, this is just ancillary and means nothing other than fantasy because I'm imagining what it might mean. I never will know. The word knowing doesn't exist here. It's only maybe. Maybe they're front running the ETH high. So, because they know if there's shorts in here, there are going to be shorts, who knows, that have their stop at over the ETH high. So they are front running. This is by assumption, and it's just a guess. But why would limit orders come in? Why would 1,000 sell limit orders stack up? They need the liquidity, you see. Where would the liquidity be? Here, and taking out the opening swing high. Is that logical? Are you guys following me? How are we doing in Trader Lab, guys? Are you following this? Is this making sense? So right here, change. So now I break low, and now I'm looking and I see the liquidity. I got short, and now I'm going for this. I did not get short up here. I was, as they say, baffled and waiting because now I don't know. I was also thinking, well, maybe long. But nope. So here, right here, is a microstructure. I'm going to now take you into micro world. And this is how I attempt to stay in alignment with the market. I'm going to draw some stuff for you here. And what I'm doing, and this is not complicated. Just remember what it is. It's random. So remember, random, not complicated. So how do you operate in randomness? You have to know what you'll do before it shows up. And you won't necessarily know anything until after the fact. Part of the joy. So let's talk about what this represents. Buyers, 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 going to the moon. Sellers, buyers, 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 break, change. Where have you seen a break? Well, nothing go down there. Where's my break? Nothing going on here. There's our little box, consolidation, break high. What do I got here? A little consolidation, break high, going to the moon, change, sweep. So now when I see a sweep, it sets up the following potential. Rotation, or we found this auction, this little store down the street from you, pint of ice cream, Saturday night for the movie, $7 a pint. You're going, I'm not paying it. And you leave. So, and this is the leave right here. Pull back, liquidity coming down. This was where I took a short. I was not crazy about the location, but this, now look at the liquidities back in. So now I'm looking, I have to scale. Actually, I took my scale. I don't remember. I have to go look. I don't want to look right now. And then I'm going for this. So this was the next short. So now this is going to set up something a little different. Now we're in a directional move. We got our ETH high. I know I have this down below as a target. And I know, when I'm using the word I know, based on my plan, I don't know anything. If I can get under here, then I've got 49 and other stuff down below to enjoy. So let's look at our liquidity and let's start looking at potential reversion trades. In the Trader Lab, I always suggest, and I probably sound like a broken record to most of you, that you learn one trade. Now, most of us come into this thinking more trades, more action, more dough, more profits. Let's look at it this way. More trades, no edge, more losses, more FOMO, more failure. You need one trade that you can make your own, that you understand so thoroughly that you are waiting for it. It's like waiting for a bus, and you leave the rest of it outside because it doesn't exist in your world. Your world needs to be one trade that you become intimately familiar with, and you have deconstructed, reverse engineered, and you know it like the back of your hand. Because in trading, at least for me, I'm not chasing the market around. By the time I'm conscious of anything, I'm already unconscious. So I need to know where my next trade will be, not what will happen, my trade. So what I know is, in this configuration, I've tested the ETH high, I've got the stops under yesterday's low, and this is my outside edge. This is my next area. It can just come under here, come back across, it could do whatever. So this was my next target. And you can see the sweep right here. So next target. Now, what do we do here? Great question. How do we participate if we've been asleep at the switch? Let's look. I know I took another short someplace here. I think it was here. Hold on, I got to look at my, I got to go look at my trading book. Guys, I got to show you these trades, so hold on. Now, I take other trades other than what hold on, I got to turn my, I almost threw a trade on here. Hold on. 1 second. I just want to go back and look at these things. 9, yeah. Yeah, okay. Didn't have one here. I did. Here. So we come down, we come up with the squeeze. Now it's continuation. Now I have support there, and I have yesterday's low as a target, right? So this is where the buyers came in. So right here, I have a high volume area. I break below it. So now I'm looking for a retracement, and it could be out here, outside edge, or out here. This is a low volume node. These are called mean reversion. Let's see if we get it. When did I get in this thing? It was here, actually. So now I'm not saying this is a trade anybody ought to take. This is micro high volume structure. Let me show you some micro structure. And if you're, hold on. You're visiting in YouTube, there's a library of webinars, a document section on this concept. And I don't use indicators. And the reason I want to say that is indicators are lagging and conflicting, and our nature is to throw a boatload of them on to create confirmation. It did the opposite for me. It created randomness. And I couldn't measure it because if you're using random inputs, what are you doing? So this is, the sellers are here. This is actually in the wrong place. It should be over here, but you'll forgive me. The high volume is there. This is reversion. So when I break away, this is now, the sellers are there. There's the sweep. The buyers are there. See the buyers? See the sellers. All right. Break low. This is like your volume point of control in a microstructure. This is right here, too high. There's acceleration down. I now know this is my resistance, this high volume. I'm not paying that. Remember, too high, too low, too high, too low. I'm out of here. I'm not shopping here anymore. Leave the store. Now, right here, let's break it down again. Microstructure. Hope you're getting something out of this. If you're not interested in this, let me know. I'll move on. So I'm now right in here. So I know I got resistance, so I know this is rejected. I know this is an outside edge. You could see it there. I'm not paying that. You're out of your mind. Break away. Now, the buyers were here. You guys know the concept, support and resistance. Where's my high volume in this structure? It's there. This is the shopping experience. I'm not paying that. Yeah, but it's on sale, retail. Are you out of your mind? I'm not paying that. Look, I'm not paying that. I'm not paying that. Short there. Okay? And this is sort of a, well, doesn't matter what it is for me. I'm just saying is I'm showing you structure. Okay? Now, next target. Then what? Clueless. Watch. Outside edge, key location, 60. No clue. I am the clueless. Not ignorant, definitely clueless. Now, what does this say? Let's look at the language. This was the retail price in the developing time frame. Now, I think one of the things, and of course, what really drives us crazy as day traders is what are you trading? What is your time frame? We have traders in Trader Lab will put a trade on and they'll get in the Barca lounger and pass out. We have other traders that are going to trade these rotations. Now, this is a consolidation right here. Let's look at this. What does it say? Come back to the language. I speak market. I don't use indicators. I had to learn to read it. All your indicator is Google Translate. It's taking some derivative of price and something's going on, right? And typically, we put a bunch of them together, multiple time frames, multiple indicators, and we got spaghetti all over the place, or derivatives of spaghetti. And they conflict. You can't measure them. The casinos are the business model. What do? Well, they don't change blackjack up depending on it. Anything. It's just the same. Otherwise, how do they know if or where they might have an edge? Speaking of edges, where's the outside edge? Here and out here. So what do I know? Let's come back to what we know. We know this is too high. There's that notch, right? So if I'm coming outside, now I have to remember a couple of things. Up here, I have stops, right? Wouldn't you think there might be retail traders like us? I call, not to be disrespectful to our brethren, they're lemmings. They all do the same thing. I'm going to ask you, now this might be the ultimate spot for a stop. Do you think it is? Or do you think other retail traders are all doing the same thing? Is this a good high or a weak high? Let's just see what happens. I don't know. Oh. And what does this set up? Another short in the Trader Lab. Here it is. Absorption. Stop pick. I call it a stop pick here. This is stop divergence. It's just a little something. This is all I use from indicator world. And that is if the market's going up and I have less, right? Divergence, higher price. And who are my buyers? Are they initiators or are they buy stops? Isn't there a difference between somebody who says, I'm getting long, and somebody who says, I'm getting squeezed? Well, so this is VWAP and this is my outside edge. It's out here. Now, the thing about the auction is there's no precision. And let's look a little further. Hopefully, hold on. There. Liquidity, bing, bing. Microstructure, break. Trigger, short, scale. Now, this is very micro. You have to kind of be practiced at this to kind of get this. And then back here. And that one's still percolating. That's all I can tell you. Not a recommendation. And what was the key obstacle to all this? This. And where are we trying to go? Not a recommendation. Remember, this is in here. Don't know. And what's our targeting area? Here 50. So for me, not a recommendation going here. How many trades do you need? My opinion, not too many. I think the idea is to make profits, not action. Just saying. How we doing? Guys, if you're visiting in YouTube, this is the Trader Lab. You can learn this if you find it interesting. And it doesn't mean you'll be a successful, sustainable trader. Most of us come into this business with beliefs. I understand, me too, all of us. Nobody's different here. And those beliefs are that we can predict, we can squeeze the risk out, and we also might even think that we can find what everybody else has missed. I did that, but I have an excuse. When I started trading in 1980, Wells Wilder and all of that was new. I also shared an office with George Lane, and sorry to be repetitive, but he created stochastics, so I thought oscillators were really it. Well, it turns out, no, they're not. Neither is RSI, neither is moving averages, neither is Fibonacci, neither is Elliott wave, none of it, really, in my opinion. Again, I've used them all and tons more of stuff, plus things I created. I used to have 32 markets on my CQG. I mean, all kinds of derivatives, but I was a position trader and a swing trader, so I was not a day trader. So when I was building all these processes and doing my research, a lot of these things were new. So it was pretty neat, but also very costly for me because of the random winners. I thought it was the mix, and that was logical to me. Unfortunately, this business is not logical. It is not, unless you own a casino, you don't know the business you're in, and you're going to try to adapt this to what you're familiar with. And that is structure and familiarity. The outside world is very structured, even though there's random elements in it. But there is a lot of structure or protocol. We all are, protocols. Red light, there's a protocol. Stop. Not interrupting people. There's social protocols. There's all kinds of stuff that we do. You meet someone, you shake hands. It's a protocol. So what I'm trying to say is protocol is just something that's kind of imprinted on us. So we expect behavior, and we're in this rigid process through socialization and reinforcement, parental education, the rest of it. Okay. So none of that applies here. Getting approval, being right, all the things that motivate us as we're developing have nothing to do with this business. But since it's all we know, we bring that here. And then we try to make the business fit those elements. Well, what happens if you're trying to solve for the wrong thing? And I'm going to suggest probably you are. So if you're not a sustainable trader, and that means profitable, not intermittently profitable, you could have a random buy-sell button and be randomly profitable. Doesn't matter if you buy or sell it. And there's something called a coin toss exercise. You flip a coin, you'll see you can be profitable flipping a coin and still lose. It doesn't matter. That's random. But the idea of this is understand you're in a random environment. And then you're not solving for predictability and certainty. You're solving for randomness. Whole different deal. And that's where I think most retail traders run out of time and dollars because they are trapped in trader Groundhog Day with random winning trades. And their belief, and I'm using the term very carefully, belief is that they just have to make it better. I'm going to suggest that belief is not aligned with the business. You can't fix a defective process. You need to change a defective process. And how do you know if it's defective? Look at your overall P&L. And if this doesn't make sense to you, I understand then Trader Lab is not for you. But if you've been working hard and waking up in the same place, Trader Groundhog Day, that was me. I coined that term for myself because I kept coming back to the same place. No matter all the aha moments and all the optimization and the curve fitting, I built trading systems to do the curve fitting much better. Notice the iceberg. So let's look. What do we got? We also have this. So we got to be aware of this. Remember, the probability of getting to the ETH low. And by the way, guys, there's no prediction here. It's random. Nothing has changed. Getting the ETH high and low is 33%. But now this is where things get, I would like to say, challenging, because this is the high volume in the higher time frame, as you think of it. By the way, this is another target. Remember, I'm not paying that. I'm not paying that. And if we come out here, where was the last retail price? It's in this area. 49, 50, and then 44. So we can go here. If we get under the ETH low, and we may never touch it, that has nothing to do with trading. That has to do with maybe we're going to come 49 and 44-ish, maybe. And what was our over-under? Remember the top of the stream. Too low, same shopping, different store. This is the big box store. Too low, too high, retail. Oh, too high? This is the outside edge. If I get under too low, then we might return to the last place. It was too low. So it's too low here, fair there. This becomes unfair. What do? Let's go back to where it was too low before. Is it still too low? Right? Does it make sense? This is all mapped out. Now, what will it do? Welcome to trading. Who knows? And if you do, come to Trader Lab, clue us in. Now, let's look a little further at this, because this is pretty important. If we get in here, then we got potentially this. Okay? We need to be thinking about 52 overnight low, which is around 54. So this is sort of this. So this is an area to observe. I say observe because I don't know. Who's going to tell you? What educator do you visit who says they don't know? What educator tells you about the stops they take? I mean, come on, let's get real here. This is trading. And why would anybody take a stop? How about to protect your account so you can take the next trade? It's random. The casinos pay the gamblers. You don't see them jumping out the window or refusing to limit their risk to the bets on the table. Here, let me throw another 100,000 in here for you. Take the cocktails and the ticket to the buffet, and here's some extra cash. No. And they don't change the game based on what happened on the last hand, but we do. We get emotionally attached to the last stop. Oh my God, I took a stop. Now we're going to skip the next trade. Now we're going to move our stop to break even. Now we're going to double up. Now we're going to revenge trade. Is that you? It's all of us. Except if you come to Trader Lab, you're going to learn the consequences of the behavior. You're also going to learn the psychology that creates the behavior. And maybe, and I'm only saying maybe, what you can do about it. Because you can. Why? Anyone who's a sustainable, successful trader has been in your shoes. This is not magic. We're all the same. We're human. What is not the same is understanding the business you're in and developing solutions. Notice where this is hanging out. Notice where it's hanging out. So, not a recommendation, but I will say, perhaps. So let's just watch the order flow. Now, this out here is a low volume outside edge. So if you're operating in this, you're taking shorts only. Let me draw this thing out. Someday Bookmap is going to actually have these just go to infinity, because that would save us a lot of trouble. So I know resistance is there, and I know, let me go a little further with this. There's going to be stops up here, and my outside edge is out here. If I want to take continuation trades, and this is not a recommendation, I know already where I'll be looking for them. Let's put a little box around this. And why would I do that? Besides, you're going, Tom, you're out of your mind. Why would you do that? This is in the wrong place. Let me see if I can change that. Hold on. Every time I put a trade on, I feel just like you do. Notice the word feel. What does the word feel have to do? Fear. I have fear. Now, fear is primal wiring. I can't stop being fearful. And if I'm in an environment that's uncertain, how could I not be fearful? But let's use a little different term. Let's call it apprehensive. I'm apprehensive because I don't know, of course, what's going to happen. So how can I not be anything else? So accept it, learn what it is, and understand where it comes from. So this is what it was looking like at the time. So out here, and this is the last short. Sellers are here. There's my divergence I was telling you about. Notice 754 stops. Oh my goodness. And where's the stops? Here. Okay. So I know there's stops here. Sellers are here. And I know there's my stop divergence, and I have no clue. I needed to break under the buyers that are here, and my high volume is going to be in here. Break, that's a trigger. So right here, now you have to be kind of experienced with this stuff, you know. Buyers are here, sellers are there. High volume is here. This is a microstructure. This takes experience to understand this is the retail price. So I had buyers there. I got sellers there. I got buyers here. I had sellers there. Buyers going to the moon. No clue. Sellers. Buyers are there. Buyers are there. I'm below these buyers, and the volume is here. Break here. This is a short, and then I'm going lower. Watch. VPOC migration. This becomes potential resistance. Also, I can rotate back here. So now I have I'm out here, so I have resistance here. Well, that's that. So this is about it. Nothing more, nothing less. Target, and then whatever. And then we have FOMC, and then it's back in the Barca Lounge. You guys have questions, and thanks for visiting Trader Lab. And if you're in YouTube, if you're finding this interesting, and you're interested in the business of trading, there is no cost for the Trader Lab. And the Trader Lab is not about me, it's about you. I'm just a trader. And, unfortunately for me, it took me much longer than you. The problem you have is you have too much information, too many chat rooms, too many ideas, too many plug and play ideas, too much get rich quick. It's normal, but it's not sustainable. So everybody comes into this business with a fantasy of what it might be. I'm going to assure you, if you come to Trader Lab, you can ask other traders in there, what is this business? And it is not what you think. So you might be trying to solve for what this isn't. I don't think you can solve for something if you're aiming in the wrong direction for a solution. You will only wake up in the same place just trying to fix a broken process. It's really more about trying to operate in this environment with a process that's aligned with it. I hope that makes some sense anyway. So now we're in real time. Nothing to do. Sit back in your Barca Lounger. This short, and I barely got this on before the streaming. It was almost like, and I don't like to put trades on when I'm streaming. So I don't initiate them. And I miss tons of trades doing this. But my rules say before stream, trade okay. Because once the trade's on, then it's just trade management. And that's kind of simple. So random. So how we doing in Trader Lab, guys? Are you asking me, Ethan, why did I lean short? Because of the FOMC? No. Actually, I'm just short because that's what my trade plan showed me and my narration of the condition of the market. When the condition of the market changes, I have structured trades that are in alignment. So FOMC is not material to me at the moment because I'm trading participant behavior. So FOMC is a fundamental event. We all know about it. but that's not what's happening right now. When FOMC comes out, I'm not going to be anywhere near this. I'm going to be, in the bunker with a helmet on, and I'm not going to take outsized risk. Put it this way. I have streams that are posted up on YouTube, FOMC days where, there's like 20 trades in huge days, huge range. That is FOMC, but it has nothing to do with FOMC. A fundamental input that surprises the market will disrupt the auction, and then the market reprices based on an input. Now, that can be a tweet, it could be tariffs, it could be FOMC, it could be CPI, it could be somebody trips over the cord at the CME, right? It could be any input. So we know about the FOMC, but what are we trying to do in trading? It's not a fundamental event. At the moment, this is the behavior of the participants. So as long as the selling is ongoing, I'm short. I have no longs. There were a couple of possibilities. We have a trade in the Trader Lab called the IBF, which is a long. In fact, I showed it yesterday in the stream, but it was a different configuration. And even then it was counter trend. A long today in this context does not exist for me currently. That could change later. That has nothing to do with the moment. Currently, we're going south. All I have is shorts. And if this is wherever the low of the day shows up, I'll never know until hindsight. So I can't do anything because I don't have that skill and I don't know anybody else. I've never met a trader who says, this is going to be the low of the day. I've met, and I mean successful traders. I certainly meet retail traders all the time who think they're going to be trying to buy this because it can't go lower, and they're going to pick the high and the low of the day. My opinion, and it's only mine, that's a recipe for exit stage left and you're on your way out of the business. This is a business of alignment. Let somebody else pick the high and low of the day. There will be a high and low of the day, and we'll know it in hindsight. Is it the low of the day, or is it just a counter rotation? How can you differentiate between this? Well, this is a weak low, but let's just say any of this. How can you differentiate? Where's the low of the day? Only when you get a high volume reversal, then you'll go, maybe that's the low of the day. And even then it might just be a squeeze. But what do we see here? Liquidity. What's down here? Darkness. What's this? Press. What's this? Sweeps. Where's my counter rotations? Not happening. What does this suggest? Where's my target? Not a recommendation. Well, so that's it. This is my last short, and I feel very lucky to have gotten the thing on. That's that. Now it's trade management. If you're visiting in YouTube, this is about the business of trading, and it's just a way to do it. There's probably better ways to trade. I don't know. This is what I found for me is it's understanding a language of participant behavior. This is what the auction is in order flow. Everything else that I loaded on here to create certainty only created conflict, ambiguity, and randomness. If I am random and my inputs are random, I cannot measure it. Then I'm only gambling. And that's why the casinos don't change their games, and they don't have a blackjack game where sometimes it's 7 cards or sometimes 10, and sometimes they just throw the deck up in the air. They just do the same exact thing. They know they have an edge only by doing the same thing. So that's our business. So now you own a casino. You didn't know that, but you have a choice which side you're going to sit on. You could hang out with your buddies, the gamblers, have a great time, have the cocktails and get the ticket to the buffet, or you can sit on the house side of the table, and you will be paying the gamblers because every business has overhead and costs of production. But you own a casino, my friends. You are, unless, of course, you like to gamble. So then you'll go out of business. If casinos were the gamblers, they'd all close, but they don't. That's a proven business model. If you know a proven business model called gaming, then we need to approach this differently. Does that make sense? That's why I created the Trader Lab. And part of it's a reflection of my own experience. Now, you guys, again, I was mentioning your problem is there's so much information, all this stuff. All you need is one thing, Remember, this trade could be done right here. It didn't pull. You see an iceberg is executing. Would you be okay? This is a target, and so is this, and there's nothing says it can't go any further. This trade can be done. You could be back in your Barca lounger. That's not terrible. What do you think? This is just one. There's been a whole bunch of these. Do you think you can create a sustainable business with this process? Now, the thing about the process is you got to come to Trader Lab and do the work. There's no plug and play. So we have to give up on the idea that somebody can hand you a, quote, setup, and now you mechanically take it. It doesn't work that way. Otherwise, we'd all have ATMs in the basement. In fact, you'd be saying, gee, I need 2 of them because I'd be withdrawing so much cash. Fantasy doesn't work that way. If it did, you'd already have your ATM. And I'm willing to bet you don't. So why? Because you're probably doing what most retail traders do. And with the failure rate being so high, I think there's a big lesson in that. And that is, don't do what they do. I coined a couple phrases. Another one is, think like a retail trader. Don't act like one. So if we know where their stops are, because they all are lemmings, am I going to put my stop there? No. Am I going to get long? No. If I know I have a weak low, wherever it is, I'm trading into it. I'm trading into this because there's going to be the buyers in here, whoever they were, and it might just be a short squeeze. You see the stops? We test it. Then it's over and we come all the way back. Or if I can't get above, what's this price? Retail. Break away from it, then hasta la vista. Where's my target? There. And this has been on the chart since, when? We talked about this in Trader Lab early this morning. It's been here a long time. Anyway, that's it. I trade. I'm flat. Not a recommendation. I'm clueless. It could go to 0. I don't know. Why would I exit ahead of this when I got that? And now this is gone. So what does it mean? I got my limit buyers. This is sitting in the book. This is order flow. Do you think having an order flow tool might give you insight that other traders have no idea? This is called edge. Now remember, this doesn't mean that we won't come under here and go to 0. We have this and this as primary targets. And again, can keep going. Not my job. What do we know now? We're under here. We can come back, or we can get our short covering. Don't forget, FOMC is at 1 p. Central Time. I stream until 12 noon. Then I'll be in the Barca Lounge. Let's go back to the higher time frame. Here, 49. 49. Main target. Why? We fell out of this. Too high, too low, retail. You're out of your mind. Okay, in the car. Break under here where it was on sale. We're out of here. Get in the car, drive to the next store. Where is the next store? Here. Where's the retail price in here? It's this 49-ish. Horseshoes and hand grenades. Where's my resting liquidity? There. Where's the target? There. I have a term. Horseshoes and hand grenades. Done. Now, you're going to say, well, Tom, what happens if it goes and keeps going? I'm going to go, well, that's good. Now, if it does, I have other ways to re-enter. And Not at the moment because I'm streaming, but I'm okay. I've had a productive day. How's your day going? You doing okay? How we doing in Trader Lab, guys? Morph, that's excellent. JJ Marks. JJ Marks is a resident psychologist. He does not make house calls, though. By the way, guys, reminder, if you could go back in a time machine, what would you tell your newbie self? What advice? And if you haven't responded to that, I'd personally appreciate it. Given the large number of traders that are in the Trader Lab, since it's a no-cost community, consider this a favor to me. And it's really for all of us. Because we're all developing traders. I will always be a developing trader. 46 years of trading, both professionally and out here with you every day. I'm always amazed. I'm always thankful, and I'm always curious. I'm curious what happens here. I'm curious if I break below and I come back to this. I am curious about these locations, and I'm curious if this is the low or if there's just more to go. I don't know that. I do know this was my target. So now the hindsight is 2020. I call that Hyde. Hyde, Jekyll and Hyde. Hyde's the lunatic. Hyde is your primal wiring. Avoid risk, seek certainty. It's what helped with the survival of the species. Why? What's behind the rock? Is there a saber-toothed tiger? Fear. Then what? Then you don't go behind the rock, and then you see dinner running from you. Now you chase it. So you have fear, and then you have FOMO. Two, like polarity, two opposite stimulation, if you will, going on. Primal behavior. Avoid risk, so you're looking for certainty. I got to be sure there's no saber-toothed tiger behind that rock. So now you're looking for confirmation. It's just part of primal wiring. When you're trading here, this is the hard right edge. What is it going to do right now? Is it going to go up or break down? Is it going to go up or break down? Right here. What is it going to do right here? Do you know? You see, you can't. Now, and neither can I. So how do you deal with this? Well, maybe you have a trade plan and you already know what you will do. You don't know what the market will do. So let's see. Let's watch right here and see what it does. Isn't it interesting? What is it going to do? Interesting. Right here. Watch. You see this? Do you know what it was going to do? I'm going to tell you, I have no clue. But I do know what might happen right there. And then it's what's going to happen on the other side. So we're going to watch this. Just to watch it, nothing more. Micro high volume is here. Too high. Right there. Liquidity under. There. What is here? Microstructure. Now I'm going to take you down into the subatomic level. Right there. This is microstructure. It's not anything more than structure. This is reversion. So what do we know? Buyers are here. We come under and we grab inventory. Buyers are here. And then something interesting. Does this make some sense? And now, microstructure. Where's our outside edge? Sort of out here, out here. Now, there's nothing here to work with other than that. These are order flow structures. You can learn this in TraderLab. Not saying, now this is not a long, guys, unless, that's your plan and it's vetted. But what might it be? You see, if the best you have is maybe when we come back here, the buyers here will go, oh, really? I can put a few more in the cart. There they are. And that is. Can you see how, if you understand what might happen, that you can anticipate it? Why was I pointing this out to you? By the way, it could have just as well come under there. Still might. That's not the point. The point is, if that's my exit, there was a reason. Not saying it's the low of the day. That part we'll only know in hindsight. And Hyde is going to tell me, you should have got long there, Tom. You knew. Yeah, I didn't know anything. What I knew was that this was a level in alignment with another key level that's material. It's not a long. For me, could be for you. For me, it is out. And that's not a recommendation. There's other traders in TraderLab who knows, are going maybe for this and this. The thing about trading, there's no precision, So, and all this might do is come up, outside, breakdown. Could do anything. So I know this is too high. This is too low. That's what this is here. This volume out here, too high, too low, too high, too low, retail. I'm not paying that. All right, get in the car. What about this? Buyers. What about this? What about this microstructure right there? Let's look at this. I'm running out of time. If you find this interesting, and if you're visiting in YouTube, give a thumb up, support the channel, and come to TraderLab. I mean, what are you waiting for? I think the price is right. No cost. Hopefully it'll stay that way. So what do we know? Microstructure. Too high. Break low. Support. Resistance. Support. Resistance. Resistance. Squeeze through here. And then, helmet time. So again, for me, Barca Launcher. For you, if you're still short, you have a trade management process. If you're getting long, counter trend trade, right? And that's it. So this is the TraderLab. And this is also FOMC day. Remember FOMC, the rate which we suspect will be a 1/4 point drop, is in the hopper, potentially baked into the cake. And that comes out at 1 p Central Time. And then at 1:30 is the press conference. That is really where things could get interesting. I personally don't trade that report or in that volatility because I want depth in the book. And you'll notice when important things come out, this will get thin. And the problem, of course, with that is something called getting skidded. And that's where you have a thin book. And if your stop gets hit, it becomes a market order. And you need the liquidity on the other side to get filled. And if the book gets swept, they'll fill you wherever. That means you cannot effectively manage risk in that environment if you haven't figured that out. So I don't bother with that. There's so many trades that if you are operating without a specific plan for that kind of report, then you're gambling. I have a plan for trading reports. Part of that plan is not to be foolish. Adjust the risk, drop down the size, all kinds of stuff. So it's very different because I want to try to keep my risk, of course, constant. So I'll drop down. But if I'm going to get outsized volatility, I still need to be thinking about my risk. So if I'm going to trade the volatility, I have to drop the size. Or not trade it, just hang out. If I never took another trade today, no big deal. That's just me, though. One thing you'll find is if you develop a career in this thing, in trading, you're not going to have this FOMO thing. You're going to be much more selective about when you trade. And it's not about, I got to do something. You're not an hourly worker. This is a business of edge. Your job is only to interact when you have an edge. And the rest of the time is let the gamblers have a good time. Just make sure they get a coupon to the buffet and a few cocktails. They're probably going to need it. So, and that's all in humor, you know. And I'm not saying Trader Labs for anybody or this process or this approach to the business. I have no idea. I can only relate to what I went through with 46 years of this and all the time I wasted and the dollars that went out the window in spite of the winning trades, don't forget. And in spite of it all, it was not sustainable. And I could never figure out why. So I just figured, well, persistence. It's not persistence. If you're persisting with a defective process, you're going to wake up in the same place, Trader Groundhog Day. So I suggest you reflect on what you're doing and is it working? And working means sustainable, not a hobby. This is a business. You want to be in the business, you got to approach it like a business. You are the CEO of your business. You have to hold your employee, the trader, accountable. You have to set goals. And that employee has to agree, make a commitment to those goals, whatever they are. And if it means research, if it means statistical extraction to determine if you have an edge, the work part of this business. Trading is really just bringing your plan to the market. All the work is done outside. When I trade, and I would say other successful traders trade, they already know what they're going to do. They don't know what the market's going to do. We're not in the prediction business. We are in the alignment business. Where's resistance? Isn't it there? And where's support? Isn't it there? Notice the liquidity is coming back. This is just something, as we say, food for thought. Hope you got something out of today. Appreciate you guys visiting Trader Lab. If you're seeing this in YouTube after the fact, please give a like. And also use the link in the bottom of YouTube if you want to actually become part of Trader Lab community. It's open to everyone. And it doesn't matter how long you've been trading, how you trade. Doesn't matter. What matters is you have a genuine desire to create potential sustainability. And that is going to require work. And the work, what is so difficult about the work is changing your beliefs to maybe what you're doing is not sustainable in spite of the random winners. That's what kept me doing what wasn't working, because I'd have winners. And I thought it was just more winners. It's not. It is edge. You can't extract an edge and know what the probability is of getting risk neutral. So the worst that happens is you scratch when a specific scenario or trade shows up, then you're just gambling. And I'm going to say, don't gamble. Build a business if that's your objective. And if it is, use the link in the bottom of YouTube. Come to Trader Lab. And Trader Lab, please let me know how this is working for you. Let me know what you would do differently if you could start over again, and what advice you'd give to your new trader self if you had that chance to go back in a time machine. What would you tell yourself? And how would that change your outcome? Thanks everybody for visiting the Trader Lab today, and Trader Lab participants. Appreciate your time, interest, and all your contributions from all of you. And I'll see you soon in the Trader Lab.